Hello everyone, welcome to the weekly focus into the market whereby we look at the market to see what our expectations should be in the coming week with respect to market prognostic, to know our key zones of interest and what we should be expecting from the market in the week for the week that will be starting from October 14 right up to October 19th. So we'll start right away with our fundamental analysis, or the main key fundamental analysis that will be affecting the market this week. That is what we are focused on. We should first of all check the fundamentals to get our mind prepared. So on Monday, what we have known is that Monday is a bank holiday for Japanese yen. It's also a bank holiday for all pairs related to the United States dollar. It's a bank holiday for the Canadian dollar. And though it's a bank holiday for the USD dollar, we'll have a speech from Wale, who is, of course, a member of the FOMC committee. Then on Tuesday, we have a claimant count change for the Great Britain pound. And we also have the Canadian dollar CPI. And at 10:45 p.m., we'll be having the New Zealand dollar CPI. On Wednesday, we'll be having Great Britain CPI, of course, at 7:30 in the morning. And on the Thursday at 1:30 a.m., we'll be having employment change for the Australian dollar. And at 1:15 p.m., we'll be having the main refinancing rate for the Euro USD dollar. And at 1:30, we'll be having core retail sales manufacturing for the United States dollar. And of course, unemployment claims that comes up every Thursday at 1:30 p.m. And at 1:45 p.m., we'll be having the ECB press conference for the Euro USD. And of course, on the Friday at 7 a.m., we'll be having the retail sales manufacturing index for the Great Britain pound. That's what we'll be having, or that's what we should be expecting as far as the high impact news is concerned for the week that is coming up. From there, the next thing we should be looking at is the DXY. So, what are our expectations with DXY? What you have known is that in the previous week, DXY has constantly been in an uptrend. So, what is our expectations? What should we look at as far as DXY is concerned? For us to have an in-depth analysis of DXY, it is worthy for us to look at the previous trend. And in looking at the previous trend, we have to use Fibonacci retracement, and we'll actually see that based on our Fibonacci retracement, the XY is currently at the equilibrium level, which shows that there is possibility for the XY to retrace back from the equilibrium level, or it should push further right up to the 61.8% level. And of course, what they have noticed is that on the daily time frame, immediately after the 61.8% level, there is actually a supply zone. There is actually a supply zone that brought about a change of character. So there is a possibility that if the XY bypasses the equilibrium level and move to the 61.8% level, then obviously the XY will definitely push. It will definitely push into the supply zone that is above the 61.8% level before we are seeing a continuous or maybe a reversal or a downfall, or it might further move to the 78.6% level before a retracement. So that is what we should be expecting as far as the XY is concerned on the daily time frame. We'll see a further push that will definitely move to the level of 61.8% level and possibly to the demand zone that is about at 104.07 level. Then from there we'll see the reaction of the market. So that is our expectation. That's what we should be expecting as far as the XY is concerned on the daily time frame. From there we should also be looking at the 4 hours time frame. We should be looking at the 4 hours time frame to see clear demand zones clear demands and supply zones, which we should pay keen attention to as far as the market is concerned this week. So on the 4 hours time zone, we will notice that it has moved into a key zone, that the market has first of all projected a power wick at that level. And this key zone is of extreme importance because when the market was moving down, there was a consolidation before the market gathered momentum to break the zone. So our key interest as the market moves to this level is to see how the market will react based on the power zone. Normally the market has pushed into the zone and retraced back. So since the market is on an uptrend, we are expecting to see that, okay, after this consolidation within this zone, the market will push further to the market is actually consolidating in this area to gather momentum to push or break this zone and definitely move into this demand, this supply zone, which of course is above 61.8% level with the Fibonacci retracement. So from this level, we can be expecting the market to further drop down. Apart from that, there will be actually nothing we can do as far as the market is concerned. At the level of 102.915, the market can further push here, retrace a bit, test this level, and then breaks the zone and move up to the daily demand, the daily supply zone. Then before we can be expecting a retracement. So with these on the 4 hours time frame, our expectation for DXY is to see that DXY continues in an uptrend. But nevertheless, if to say that with this level, if to say the market pushes down and then breaks the consolidation zone to the zone's downward side and then retests it, then we should be expecting to see the market fall. But initially, our overall bias is to make sure that since the market has been creating a series of higher highs and higher lows, we should be seeing the market push further to another zone. That is our expectation. We should be expecting to see it to break the level of 103.285 right up to 104.067. That is our expectation with DXY as far as market this week is concerned. Then from DXY, we should look at Great Britain pound, United States dollar. On a daily time frame, you will see that Great Britain pound, United States dollar has been on a downtrend. And despite the fact that it has been on a downtrend, it's currently on a key demand zone. So by the time the market was moving up, what are we seeing? We will notice that the market has created a higher low at this level. Here we are currently having a higher low at this level. Then the market pushes up, then breaks the previous higher high. That's a change of character, a change of structure. Then it creates a new structure here before reversing back to this zone. So currently at this zone, for us to be sure on the daily time frame that Great Britain pound will continuously sell, obviously we should be expecting to see a slight move or a slight reversal from here. Maybe it pushes back up a bit, then at this level it drops down to bring about a change of character on the daily time frame. When it brings about a change of character, normally it will create a new lower low at this level, then retrace back maybe to test where the movement originated from. Then from that level, it will start creating a series of lower lows and higher lows while it's moving down. So that is our expectation on the daily time frame with Great Britain pound. Now, we also have another option whereby, since this is a demand zone, the market has not changed character. There is no change of character at this level. So the market can possibly retrace from this level and create a new higher high, and then keeps on creating series of higher highs and lower highs and moving back up. Then we will be also looking at that option. But for now, our overall bias is to see that the market retraces a bit from here, then creates maybe an internal structure, then moves down to break or to change character. Then from there, the market keeps on creating series of higher highs and lower highs. Lower lows and higher lows. That's our expectation on the daily time frame as far as Great Britain pound is concerned. Now, if we move from the daily time frame on Great Britain pound to the 4 hours time frame, what are we expecting? What are our expectations? We need to be keen about that. On the 4 hours time frame, you actually see that there had been a clear change of character as far as the market is concerned. As far as this zone is concerned, there had been a clear change of character, confirming to us that this uptrend has been nullified. This uptrend has been changed. Okay, right from this level, we had a break of the trend line, then it moves down to change character. Immediately after it, what did we see? We saw a clear consolidation of the market. It was actually a clear consolidation of the market, telling us that the market will have to consolidate for a period of time. So after the consolidation, what happened? The market has been falling down before moving into this demand zone. Now in this demand zone, what has been happening? The market keeps on building momentum, which shows that the market can retrace from here, or the market will definitely gather momentum and breaks down to this zone. But now, if we want to take an entry on the 4-hour time frame, we actually need to take an entry based on our overall trend, our current trend in the market, which of course is a downtrend. So what should we be looking at? What should we be watching out at the market? There is a possibility that the market can retrace back to this supply zone this coming week. The market can retrace to this zone. So there is a possibility that market open, then the market can pull up to this zone, then fall from the zone. Or even if the market breaks this zone and clear off the liquidity that is seated up here, the market might get back to this demand zone, which of course, to this supply zone, which of course is the zone that caused the change of character. So these are the key zones we should pay special attention to on the 4 hours time frame. As far as this week is concerned, if you want to take sell positions, those are the zones we should focus on. But now, if to say that the market consolidates like this, the market is actually struggling here to build a channel on the 4 hours time frame. So now what happens with the channel that the market is creating? If the market fails to retrace back to this zone or to this zone, then what should we be expecting? We should definitely be expecting to see the market moving along this channel and maybe finally breaking it to the downside. So once the market breaks this channel on the 4 hours, it's time for us to enter the market. And if we enter this market on the 4 hours time frame, we should be expecting the market to get down. The market will of course take out the liquidity that is at the level of 1.28137. It will definitely take out the liquidity at the level of 1.27248, and definitely we should be expecting to see a market reaction at the level of 1.26816, which of course is the demand zone. So pay attention to this as far as Great Britain pound is concerned on the 4 hours time frame, and of course combine it with what we discussed on the daily time frame. From there, you can move maybe to the 1 hour time frame to see if you see clear zones, or maybe the market will communicate to you better and clearer. Of course, on this 1 hour time frame, you'll notice that the same demand supply zones we have on the 4 hours time frame are the same supply zones we are having on the 1 hour time frame. So you should pay special attention to them. But you should put in mind that the market is in a downtrend. So anything you are doing with the market, it should be in relationship with the downtrend this week. From there, we will look at EURUSD. So with EURUSD on the daily time frame, there is something remarkable I want us to look at before we go into an in-depth analysis of the market. You notice that the market actually, the uptrend started from this level. So there was actually a change of character. Okay, I'll come to that. The uptrend started from here, it moves to this level, it created a new high, of course, at this level, then it created a higher low, then it pushes up, it created a new higher high, then created a higher low, then from there it moves to this, it moves here to create another higher high, then a higher low, then it created now a new structure, then now the market retraced and then changed character, then moved back up, then created now a lower low, but now the market moved back up to create a double top, and from there the market has constantly been falling down, creating a series of lower lows and higher lows. Sorry. So that's what we are seeing with Euro USD. So now look at something. When the trend started from here, what happened? We had a change of structure at this level. Now, but when the market moved up to this zone, what happened? When the market started retracing, we had a change of structure, and then the market retested back the supply zone and then pulled down to confirm that the market was moving up, and circumstances pushed the market up to create a double top where we have 1 and 2 here. From there, the market has been selling. So automatically, what should be in our mind is to see a further drop in Euro USD as far as this week is concerned on the daily time frame. We should be expecting to see a higher drop. There is first another possibility that the market can retrace back this week. If you look critically for the double top that the market has created, what should you be expecting? It shows that the first option or the first market scenario will be that the market can push down a bit, then retrace back to test the neck level of the neckline of the double top, and then falls down back maybe to the zone of 1.07918. So this is the first option we should be expecting, whereby the market pulls down, then pushes up to retest the neckline, then falls down to the level of 1.0949. That's also our expectation with Euro USD. If it gets to this level, what happens? The market can possibly get to that level, then maybe retrace back a bit, then move down to take out liquidity at this level. If the market moves down to take out the liquidity that is seated at this level, what happens? We should be expecting the market to move to the next demand zone, which of course it is this zone. So first thing, we are expecting to see a retracement in the market, either back to this base or to the level of this neckline, then it further drops down to this demand zone here. That is our first expectation of the market. Either it gets back to this demand zone, but what is sure is that the market will get to this demand zone. When the market gets to this demand zone, what are we expecting? We are expecting to see a little retracement. From the retracement, the market can move down to break it, then drops down back to this demand zone. So those are our key levels we should be expecting to see the market moving towards as far as this week is concerned. Apart from that, we need to maintain our steam, keep low, and expect that the market should push down a bit, clear up this zone. But one thing we have seen clearly from the market based on key structures is that the market is in a downtrend. Okay, that's the first thing. First, we have seen the double tops that the market has created in at the level of 1.11905. Then we have seen the market moving down to take out the neckline at the level of 1.09981, and we have seen the market creating a base, telling us that the market has a possibility to push down forward. So we should be expecting to see a slight retracement and definitely more momentum to the downside. As the market is pushing down to the downside, we should be expecting to see a reaction at the level of 1.08, which of course is a demand zone, and maybe momentum rally more to the downside up to the level of 1.07 and 1.0672. So that is our expectation on the daily time frame as far as Euro USD is concerned. From there, let's look at the 4 hours time frame to see if we will see more or clearer communication based on candlesticks. So now on the 4 hours time frame, what do we see? We'll see that okay, automatically after the neckline was broken, what happened when the neckline was broken? The market actually created a slight rising channel. The market created a rising channel, and what happened? Immediately after the market broke the rising channel, the market consolidated slightly above the rising channel, telling us that, oh, I'm not returning back to this zone, and the market started moving down. So the market has moved down, and the market is currently consolidating just after creating a harami candlestick pattern. So we should be expecting to see that the market maybe creates this consolidation in this zone, then possibly break the consolidation. When the market breaks the consolidation, what should be our expectation? Maybe we see that the market can break it to the downside, or maybe the market retrace back to test this neckline before falling down, or maybe the market consolidates, gather momentum, and push down into this key zone. So if you are entering the market on the Monday, you should be expecting the market to move down right to the level of 1.0800, but make sure you enter with stop loss and take profit. Don't just enter the market because you feel that the market is supposed to move. And make sure you enter at key levels. You don't just jump into the market because you feel that the market is in the downtrend. You wait for the levels that your risks will be smaller and your profits will be greater before you enter the market. From the 4 hours time frame on the EURUSD, what should you be looking at? You should be looking at the 1 hour time frame, and on the 1 hour time frame you will see that the same key levels, the neckline remains the neckline, okay, and the channel remains the channel, and there is a possibility still here for the market to push, okay. And currently on the 1 hour time frame you will see that the market is actually reacting based on this zone on the 1 hour time frame. The market, or this move, the move we are currently having in the market at this level is based on this one. So the move is normal, is anticipated. So what we have to see now is that the market gathers momentum to the downside, pushes to this demand zone, okay. When the market pushes into this demand zone, which of course is at 1.0800, then we should be expecting that the market has maybe followed our prognosis to a particular degree. So as far as EURUSD is concerned and GBPUSD is concerned, we should be expecting to see a further drop this coming week. But in as much as we expect the further drop, make sure you trade based on the information that candlesticks provide to you in the market. If you have been following us and if you actually like our content, don't forget to like our videos and of course subscribe to our channel and hit on the notification bell so that anytime we drop content as such, you should be the first person to be notified. Thank you very much. Enjoy your week.